Good day and welcome to this edition of the Royal LePage Binder Market Report. My name is Dominic Papa and it's our first show of the 2023 year. Certainly glad to be back and talking some real estate, and always look forward to talking to the expert, the pro that is going to give us some great information and advice as we go along all year long. Back with us is the broker of record, the man at Royal LePage Binder, Mr. Frank Binder, joins us. Good day to you, sir. I trust and I hope you had a wonderful holiday season.
Sure did, and thank you so much, Dom. It's certainly good to be with you as we start the new year, and Happy New Year to you, my friend.
Appreciate that very much, and yes, I hope everyone has just a fabulous 2023. I think everybody experienced some challenges in 2022, and I think if we all work together, 2023 will be just that much better and much more special. That's for sure. So,
absolutely, thank you.
Let's get right into this. Again, I'm so glad I get to talk to you about this because at the end of the show, I understand better what's going on, but I just see a complete flip of what's happened in the real estate industry, and where there were houses were selling at a record pace. It's all kind of come to a halt. Talk to me. What's going on?
We can say that what was once is not anymore, for sure.
Right.
And the markets have changed, and we have to realize that those anomalies will work. Particularly, we have to keep in mind that we went through a pandemic, so that you have an extreme situation that occurred that we were not really prepared for, and we really didn't know what it would do to the market. If anybody thinks about it, pre-pandemic, we were leading into what we were going to call a recession at that time. In 2021, that was what we were expecting to see coming up, and people were talking about that already in 2020. And basically, what happened is that we've just pushed that all back. You've had government supplying funds and providing for people, which they should be. And so that's kind of pushed everything into the sidelines. And you had a pandemic that kind of took over our market. So that's a bit of an anomaly. We will now return to those days. And sure, what we're seeing is we're getting the potentially the recession word being talked about more and more often. We're not sure that we're there yet, but we'll see where that is. If it's going to be one, we're expecting it to be a soft one. So, but will it affect our market on a continuing basis? For sure. So it gives us a good chance now to pause and look back at right now, because we're going to look back in December. We're going to see a 12-month period on our graphs and see what happened. And like you said, two halves. Even if we go to our first slide, you're going to see that, right? Okay. So there you go. You're looking at the number of residential listings, which peaked up at one time at 1,557 in a month, and that's back in June. And then you see it up, and then you see it dropping right back down after that, right down to a low of 338 for the month of December. Now, when I look at that number, you look at the number that 726 to 383. 383, let's understand, December is what we call a half month. You only get 2 weeks of it. You're going to have the holiday seasons from December 15th right to January 15th. So both December and January months in real estate are really what we consider half months. They're not considered full months. And so 383 for that month is actually not a bad month. It showed fairly strong demand, and that's something for us to realize. Understand that sellers particularly retreat from the market in the winter months, particularly preferring to sell their properties in the spring season. But that's typically what we'll see as we go through these numbers. Some of them just decide to stay on the sidelines, and that's exactly what some will do. We'll see what happens in the upcoming months as to how many people will rejoin the market.
The numbers there, Mr. Binder, how much do they reflect also, though, just the interest rates being raised and things like that? Does that contribute to these numbers now?
Not the listings. On the listing side, on the buying side for sure, but on the listing side, what you see is you see that real uptick because people were seeing some major numbers coming through in the early months of January and February. When sellers started seeing that, they decided to get in the market, so they put their properties up for sale. Then, as those prices started dropping a bit, you see a waning of that as you go through the rest of the year, and you see a big drop at the very end, only because it was December. But really, that was the trend after that. People are beginning to come to recognize that they were not going to get huge prices, the prices that we saw in February and March of the beginning of the year. And it takes a while for them to understand that. Some still are trying to get higher prices, and that's not likely going to be the case for most people. And
All right.
in the upper market, by the way, Tom.
Okay. Let's get to the next slide. The number of active listings at the end of the current month.
Yep. And you see that it's following the same trend as you saw before. So fewer houses are active available for inventory. But you look at the blue. If you look at the blue, that's what you're comparing it to in the pandemic. There was no supply at all. Right. And we really lack supply. And the government's been talking about a lack of supply in the housing business. We certainly have it. We're a bit of an anomaly compared to other markets, though. They didn't have this shoot up of inventory that we've seen. We've had a substantial amount of inventory, and it's tapering off. And we'll see where that goes, whether that inventory stays at those levels or kind of drops back down, starting at the beginning of the first quarter.
Okay, so then one thing that really is great about this show is that we get the numbers out to our viewers, and certainly they can understand better what is happening. The next slide is the number of residential sales in 2022. So, right. So this kind of sums up the year.
It sure does. So look at what we have is we see that the peak back in March, and basically after that, everything goes down, right? So this is the kind of stuff that we've got to deal with. Is that and then there's a bit of another big dip back in June. Back in July, and that basically just really kind of stays where it is and hovers right around that mark. And then we have a bit of drop in December, which is really pretty much going to happen, right? We have 230 sales there in December of residential homes, and that's not unusual compared to the month before to have a bit of a drop, because that, like I said, is only half a month. So it's a little bit unfair to compare that to the month before. That is just unfortunately the way that is. But it's basically. We'll see this effect basically on days in market as well. So if we go to the next slide, we can just simply move right into that one. You're going to see, as you see, less sales. Demand was not high. You saw greater time on the market. So to achieve a sale in the market just took longer. That combined with that inventory that we just talked about, with so many houses being available. People took more time to find a house. They had the privilege of looking at many more houses, which at the very beginning of the year you didn't have. You didn't have that privilege. You wanted to see one and get one right away. Now you had a chance to look at 4 and 5, and that shows up in days in the market. Notice, however, that the days in the market dropped in December, which simply means that the demand was there. I mean, there's definitely a demand. Took a lot less time to find a house. On the average, okay, some took longer, some didn't, but that's really a good figure to see that the demand was strong enough to drop days in market.
When you say the demand was there, meaning the buyers were there?
Buyers were there, absolutely. Yeah. Now, as we go through other slides, what we'll see is buyers were not everywhere. What do I mean by that? Well, they're not in the upper market. As much, and there's reason for that we'll talk about. But buyers were definitely in the market in the month of December. Days in market dropped considerably in that month. So demand was obviously there for a part of that month, no question.
Oh yeah. We do have some slides coming up that'll explain that a little more. I'm sure you'll explain that a little more in detail. Let's get to the next slide, though. The monthly residential sales percentage. Then.
I mean, let's look at this thing. Just when we experienced our first 50% sales drop, and we thought that was not good, we go to 51%. 51.88% for December. So our sales declined substantially again. But remember what we're doing here. We are comparing to last year. When you see a 51%, You're looking at pandemic numbers from the year before. And so our market was not mirroring at all what happened in the pandemic. Remember, we made those comments earlier on that
Right.
that's very hard to relate to a pandemic, which is really an anomaly in all sense of the word. So it's not a fair consideration. So when you go back to 2019, for example, we're just getting more and more to those numbers rather than the pandemic numbers that we've seen over the last couple of years.
So I'm glad, and this is the reason why this show happens, is so that we can explain, so that you can explain the true meanings behind these numbers, because this can be really deceiving to some people if they don't know the real estate industry like you do.
Yeah,
And
and
for
then
you
you
to,
know what? And that's really, really important because
yeah,
if you just go year over year, it can really taint the picture one way or the other. And you know what? It's just not fair. So what you've got to look at is you really got to look at this thing in terms of the overall, what was the normal market that we had, and so on and so forth. So I mean, 51% is still a big drop. Let's not fool ourselves.
sure.
The bottom line is that comparing it to 1 year where your sales were way off the charts due to a pandemic, it's a bit of a different kettle of fish when you
Yeah, and I'll compare it to sports because I follow sports.
yeah.
There are some statistics in sports that I think are absolutely useless.
Yeah.
These numbers that come out, like the plus minus or
Yeah.
the number of hits in a game, things like, you know what? It doesn't tell the whole story.
Yeah,
And
and this is true too of this. I mean, it doesn't tell the whole story, but it's important that not every house and not every area, even locally, will be the same. So let's
right.
remember, these are averages over the entire market. May not be the same for your particular style of house, your particular neighborhood, or anything like that. So that will change. You just can't apply these across the board automatically. You need to get professional advice from your realtor about that.
Yeah, exactly. Next slide. This is where we get into, again, maybe even more detail what you're talking about, where you have houses sold at over a certain cost of 550, and then some under 550. And you look at these two charts and how different they are.
Yeah, we talked about the demand. So when we were talking about that, what I was alluding to there is if you look at this, you have 188 homes sold in the under 550 market, and you have only 68 homes sold above the 550 market. So where were your buyers? Your buyers were in the under 550 market, and they represent here in this particular slide about 73.44%, or almost 75% of the total market. And so where was the activity? The activity is very strong in the under 550 market, which represents kind of the first-time buyer and others. I mean, not just first-time buyers, but many of them are going to be looking in that 550 or under market. But that was very strong market when you look at it. Okay, so what was really weak? Well, the upper market. The upper market was very, very weak, and really the very high end of that upper market was even weaker. So what do we see? We see 68 homes sold, but of that 68, only 4 were over $1 million. So that market is basically kind of not disappeared. It's just not there. Why? Let me try to explain why. If I'm in that market, in the upper market, I may have to sell my home to buy another home. We call that trading, maybe trading up or down, right? So if I've got to sell my house, I now have to consider, what am I going to get for my house? Well, hey, wait a minute. The prices haven't been too static for too long. You saw the drops that we've been showing you. So I've got a lot of concern about that if I've got to sell my house. And if I'm going to mortgage to get to a higher number, I got 5 different increases that I've had to deal with in 2022. So wait a minute here. I've got 2 things moving on me at the same time. It's a hard decision. So what do I do in that case? Many just retreat to the sidelines. I just pull off, retreat to the sidelines. Let me wait till it gets stable, and we'll kind of deal with it at that point in time. And that's what we're seeing, particularly in the upper market. So you're going to see less activity there, only because the decision is so much more difficult to come to, right?
When we were going through that pandemic period and houses were selling left and right, and I mean, the prices were skyrocketing.
Yeah.
Do you anticipate it going back up that way? Like will it get back to that, or is
No,
that something that was just kind of like just because of that time period and everything that was going on?
it was the time period and everything was going.
Yeah.
Remember what we had there. One
Hmm.
thing, when you have almost 0% interest or 2%
Hmm.
interest versus, a stress
Right.
test today is 7%.
Hmm.
So, you calculate that on people who are trying to get a mortgage, and the mortgage, what they have to pay monthly is substantially different than what they had to pay then. We had everybody and their uncle saying, "Hey, great interest rates. Let's do these things now." Took
Sure.
advantage of it, and rightfully so. They took advantage of the interest rates. Well, that's rapidly changed in this period of 12 months.
Right.
Substantial changes have occurred. So we have to understand that, particularly. Buyers certainly understand that. Sellers are coming to understand that because that's obviously going to affect them to a certain extent. If they're exchanging houses, they certainly understand it. But even if I don't sell it, I mean, I'm not going to get buyers to come here and pay those kinds of mortgage payments. It eliminates buyers for sure, and there's no question about that. So let's get used to the fact that that's the reality of today. Those, by the way, are getting back to numbers that are slightly over pre-pandemic, only slightly over pre-pandemic days, right? So let's understand that we're getting back to those normal markets, and it's not easy, but it's exactly what we were at before.
All right.
Close to it.
Let's keep this going then. Let's look at the next slide. And
Yeah.
it's the annual average sale price. Of course, the monthly. Then underneath you have the monthly average sale prices. So,
We always
um,
want to show the comparisons because there's a trend. Now you notice that the trend was downward, but look at the effect on the annual rate. The annual rate is not significant. It's now down to 616. That
mhm.
drift, by the way, from if you look at the beginning to the end or the highest point in March till the end of December, that's only a 12% drop annually. All right.
Sure.
But if you go to the lower price, there's a 34%, 34.5% drop in our monthly, where you went to 723 in March and you dropped down to 473. So it's a substantially greater drop, but the effect of that was only 12% on the total sales if you annualize it, right? Now, it's important for us if we want to take a quick look at this. We go, okay, well, what does that mean? Let's go back to when we first got into this from the year 2021. We saw a 36% increase at the beginning of the year. It just shot up, and then basically we've lost almost all of that the remainder of the year. See what I'm saying? So it's important for us to not get too crazy. Oh no, with the end of the world type of thing. It's not. The earlier gains that we had from the year have been erased, really, for all
Right.
purposes. And that's exactly what the message is that we want to get out there: is that earlier gains have been lost, but it's not, it's not terrible.
Mhm.
Overall, the
Mhm.
gains through the pandemic, much of that has been kept. Just
Okay.
just the last year where that didn't happen.
Yeah. Okay. So that's the monthly. Let's look at the year-to-date sales then. The list ratio, and then of course the comparison monthly sales list ratio.
Yep.
Um,
Look at how flat that's been. So if you look
yeah.
at the annual, I mean, I was just reading a report, and the average list of sales list ratio in the country, in 70 markets of the country, is 50%, and that's exactly where we are. We're
Mhm.
exactly mimicking 70 markets that are in Canada, where the sales list ratio is 50%. That's still a balanced market. We need to let people know that's in a balanced market. If you
Mhm.
look at the monthly rate, it climbed to 60, which again, when we talked about it was a strong demand month, that's exactly what that means. It means that sales list ratio went up. I mean, we had listings and more listings sold in December compared to other months. So, but it didn't affect the annualized rate in any way, shape, or form because it's really a small segment of the total market with only some 300 houses selling, right? 300
Mhm.
houses selling. So it didn't affect the market in any way. But it's interesting to see that the demand has kind of just leveled right straight off. We're into a very balanced market where buyers and sellers are going to negotiate prices, and sellers we're getting the odd multiple sales still, but we're certainly not seeing them going so far over the list price that we
Right.
want. Okay.
Right. Yeah. And that's, I think, a key point that you bring up. Is there still a lot of, I guess, I'll call it bidding wars for houses? Like, even though the market's changed, are we still getting that?
We're getting it in certain areas, okay? So what happens is real estate is really about there's nuances within a market, and what I
Okay.
mean by that, certain areas, certain types of houses will demand higher prices. Sometimes there's bidding wars on those because if I'm trying to get into an area and that's the only area that I want, and I've got two or three other people, or maybe five other people that want to get in that same area, there are going to be bidding wars on that. Okay, so
Right.
we are still seeing some bidding wars, but it's in pockets, in various different pockets. It's
Okay.
not across the board
Right.
like we were once seeing it. And
Hmm.
what here's the kick. Here's the real critical message on this. We're not seeing the prices go that much above the list price that we once did. You're not
Right.
going to see $200,000 over the list price. Not
No.
going to happen anymore.
No.
So those are totally out of the thing. Sellers should not expect that anymore, and neither should realtors expect that that's going to happen anymore because it's just not. And
Okay.
so the bottom line is that if there are multiple offers, and I've been involved in managing a few, it certainly can go over, but not substantially.
Mm. Okay. Following up on that, our final chart kind of speaks to it a little bit. The most popular style of home for
Yep.
purchase and
Yeah, we always throw this thing in just
yeah,
to
yeah.
support. I think it's really important. What you do is depending on the house type that you're in, you can see that there's a much different average price for each type of home. I think
Right.
you want to draw that to everybody's attention. So your highest average price basically is the raised ranch in this graph. On the average, your two-story follows right behind it, and then the bungalows that the lowest being 1.5 stories. 1.5 stories more or less combined to the core city. We don't see a lot of them outside of the core city of Windsor, so that's the reason for that. Generally, a smaller lot, that type of thing too. So that's why you're going to see differences in prices. Now, what we don't show here is we don't show the average price of the condo market. The condo market has actually grown in
Mhm.
this year. Why? Because we see a lot of first-time buyers moving to that market for their first home, and there was always strong demand. So we saw an 18% increase in condos, apartment condos particularly, over the year. And we had a lot of new builds
Mhm.
that are condos, and you still see them going on because they're still completing the construction on several of those projects. So that is a big part of our market where a lot of the first-time buyers went to buy property at a property that's anywhere around the $400,000 mark. So that market was very solid throughout the year. Didn't really change a whole lot. There wasn't substantial losses in the value of them as well.
All right. Well, we're off and running. 2023 is going, and
Absolutely.
I'm sure it's going to be interesting the next 2 or 3 months to see where all
Yeah,
this does go.
we're basically the Royal LePage basically is saying that don't expect to see many changes until the second half of the year. That's
Okay.
likely going to be the case. We're fighting inflation. We just don't know where that's going to go. So while that's going on, a lot of the attention is going to go to keeping inflation under wraps. So I wouldn't expect many changes until at least to the third quarter of the year. That's going to be that's when we'll likely look for maybe more momentum to start coming back to the housing business at that point in time.
Well, in the meantime, it's a good thing that we do have Royal LePage Binder there to help us. That's for sure. And
Appreciate it. Appreciate it.
get us some great professional advice when they're, because I'm sure there's still a lot of people looking for real estate and trying to get themselves situated and
Yeah,
things like that. So,
we have great. I mean, Royal LePage came up with immigration figures and all these migration figures, so
sure.
it's substantial. We can get business from a lot of different places, so we look forward to it. There will be plenty of business for everybody at the end of the day.
And like I've always said, don't explore this on your own. Call Royal LePage Binder, get a hold of one of their agents, or I'm sure if Mr. Binder is available, he'd be more than happy to help you. But get in touch with Royal LePage Binder. They'll give you good direction, good advice, and they can help you with which is a very important investment in anyone's life. So take advantage of their professionalism, that's for sure. Mr. Binder, I will look forward to seeing you in the next month, February.
Yeah, we look forward to it.
And until then, stay safe, stay healthy. And again, great to have you back with us this year.
Thank you.
All right.
Thank you, Don.
All right. And don't forget to check out Royal LePage Binder and all their social media pages. A lot of good information there as well. And again, don't be afraid to get in touch. Even if you want to just get some advice, they'll be more than happy to help you with all of that. That's it for this edition of the Royal LePage Binder Market Report. Until next time, this is Dominic Papa wishing you a great day. Take care, everybody. We'll talk again soon.